Right, thank you for joining. My name is Mike Hamilton. I'm your host for the next 15-20 minutes. I'm just going to do a very short but very informative presentation on timeframes. These are really critical, and we're going to talk about some of the issues that some traders might have if they don't understand, haven't clarified what timeframes are best for them. If you get the right timeframes and you have done enough preparation in the markets, then they can really multiply your returns. So let's get going. By all means, type in any questions if you want to ask me anything on the. Oh, excuse me, one second. I'll just lost my voice there a second. Welcome everybody. You've just about caught the beginning, so you haven't missed anything. So we're going to talk about timeframes and the importance of them and why they are so important. And also going to talk about why some traders fail and lose money because they don't use the right timeframes. Right, so smaller timeframes are actionable, used by day traders. Bigger timeframes can check for patterns and contradictory trends. Now, this is the main issue. It's this area of the small time frame looking for little moves, versus the bigger time frame where you can actually see what's going on. And this is where the preparation is important. You've got to, I think you've got to come into the markets with the bigger time frames marked up. If you've not done that and you're not clear in your conscience and your subconscious what the trend is, where the market's going, and what you should be doing, whether you should be buying, whether you should be selling. And I use the time frames in a very, very particular way that really helps me. And I have a template that I throw over my time frames that makes them the difference between winning and losing. And if for any reason the market is not behaving as I expect it to with that time frame, then I'll stop using it. Okay, so if the whole idea is to be very clear about at the outset before you even open your account what the trend is, then it's about what time frame suits you best. And it also depends on what your expectations are, what your targets are. If you're looking for a big move, then studying smaller time frames ain't going to get you the big move. It just ain't going to do it. Hi everybody, thanks for joining me. It's about how you interconnect these timeframes that makes the massive difference. I'm going to give you some examples of some charts. I'm going to talk about the timeframes that I like and why I like them. So I hope that's going to help you with your trading. So obviously we've got trends that can be primary, intermediate, and short term. Short term, if the markets are consolidating, and you are a day trader, then you're just looking for small clips out of the uptrend or the downtrend, depending on what you're doing. If you are an investor, you need to be very clear about, I would even go into monthly charts and weekly charts. Monthly and weekly charts are very, very enlightening, and so many traders don't even bother with them. All right, so and the issue is, particularly with day traders who lose money, the issue is, if you haven't got the primary trend, a lot of day traders end up counter trend trading without even realizing it because they haven't done enough preparation before they come in the market. So I've got a couple more slides with you, and then we're going to get on to the main guts of this. So novice traders are studying small time frames, trying to take a nip here and a nip there. That's not my style of trading. It works. I've seen people use a lot of leverage to get very small moves using 1 minute charts. I used to use tick charts. Don't often hear people talk about tick charts, but the only reason why I don't use tick charts anymore is because my system doesn't require it. I think my system is way better than the tick charts I used to use. So let's just trickle through the so what time frame should you be watching? The bigger the time frame, then the bigger the move, the more reliable the signal. Smaller time frames can be very distracting and cause you to counter trend trade. So like as I said 2 or 3 times, it's well worth repeating. You have to identify the underlying trend, the primary trend. And if you want to be a consistent trader and have a higher hit rate, you've got to go with that move. Okay, so let's just go to, I want to show you this example. Let's get rid of this. Oops, where's my charts gone? Right, this is actually a trade I've just discovered today that I've missed. It was on my watch list, and I've just missed this one. Right, so what you've got here is a weekly chart with RSI and volume, and a 50-day, that's it, it's 20-day average. I'll leave the 20-day average. I was about to take it off, but let's leave it. It's hunting oil. Now, this hunting oil was not that long ago in 2018 as high as £9, £8.80. At the lows, it was £1.20, and it's currently £3.50. I think this is a really sweet chart. Why do I think that? Because it has got a gap here in March 2020, but that's understandable. But it's not a gappy chart. I do not like charts that gap a lot. I like markets that are liquid, so they've got decent volume. They stick to major support and resistance levels, and they adhere to Fibonacci ratios. And they have clear trend lines. If a chart doesn't fulfill that, I move on. I go and find one that is. Right, so why do I like this one so much? If you look at the period from this October 20 low, you've got a huge trend line here underlying it. Now, when we dropped back hard in July last year, they didn't take it down as far as that trend line. So that tells you that there's a lot of interest in this stock on the lows. Also, the thing that I like, if you've got a trend line across the highs, let's bring that most recent high, you'll note a couple of things. We will have a shorter term trend line here from July, from the lows in July, October, and December. And we've basically broken out this chart pattern. Now, you're not going to see chart patterns like this in 15-minute, 60-minute charts, are you? I know I'm teaching you to suck eggs. I'm sure you understand that, but let's just go through it. So the only way you're going to pick up overall and potential for find breakouts is if you're using bigger time frames. Let's look at the daily. So there's the daily chart with the same chart pattern, and you will note that here on the Monday 12th of December, we had a new low and we closed immediately above on the 13th of December. So we were holding a chart pattern, tick box number 1. If you haven't got a tick box, then you need one. So we were holding a trend line. We were forming a breakout pattern in the bigger time frame on the weekly. The chart was clean. We've got a history of bottoming and breaking. bottoming and breaking, bottoming and breaking. So every time this chart saw some profit taking, the buyers came back in on the bits on the dips. Saw some profit taking, buyers came in on the dips. And now we're sitting up. It's tougher to call up here because we've got 3 touches of this resistance. So if we sit above this 350, we pop up and sit above it, then the 350 is the support, and you can buy this with the potential to go. The other boxes it ticks is volume. Look how we come down here and find buyers. Every time we come down here, the volume increases. So that's the footprint of the market. That's a really good question. Do you buy and short on a chart like this? The absolute answer is no way. No way. No way do I buy and short this. I would only buy the dips. Why? A couple of things. A, this is an oil stock, and it's just a rule of mine that I don't short oil stocks, because I think it's the one market that you could get a shock with if there's, we've got a war going on at the moment anyway. It only takes one small event to send oil scurrying one way or the other. So I just don't tend to short oil. The main reason why I don't short it is because it's such a lovely trending stock. When you do get the most important aspect of this trade, or any trade, is to understand, in my book, is to understand Elliott wave. And when this market trips up over here at 350, all you get is a 1, 2, 3 wave corrective wave. That's not, I mean, it is shortable. If you really want to short it, you could. But it's not, it's in my trade plan not to short good quality trending stocks. But I will buy, as you can tell, I will be buying stocks like this. Now, if for any reason it fails up here and comes back to this trend line and sits on 280, I will be a buyer down here at 280, definitely. Because there's a decent chance now. We're getting higher highs here. We're getting higher highs here. This is a good trending stock, and we're getting higher lows. So if we create another higher low at 250 or 280 and hold, I mean, but I would not short it. Okay, so let's look at a 1 hour chart. Now this is where it gets sloppier. This is not a day trading stock, because it's not big enough, it's not liquid enough to be a day trading stock. If you want to day trade, you need to be in momentum markets like oil, gold, and indices, not stocks like this. You can definitely day trade stocks, definitely, but you need stocks with much bigger volume than this. Okay, so if you look, so if you've drilled down to your weekly and your daily, and you've identified this £2.40 as a entry point, you could do a couple of things. You can mark it, you could just go straight in with a stop underneath the support, and here really you need to be at least under 220 for a stop, at least. No point getting a stop there at 235 if you're going to invest in it. If you are going to day trade it for whatever reason, then by all means have a tight stop. Otherwise, keep your stop away. But if you look at a 5-minute chart, then you start to see how messy and gappy it is. So let's look at a momentum market. Let's look at oil today. So this is a 5-minute chart on oil. Let's go to the weekly. So you can see all the prep I've done on this weekly. Note how we're actually under the 20-day average. So oil itself technically is shortable because it's not above the 20-day average. And we have had even last week and in fact Friday and Monday, we dropped quite heavily from $83 to $76.50, $76.60. So any market that's not on can't hold a 20-day average is definitely shortable if that's a market you want to short. Every time you're above the 20-day average, all the dips get bought until we fire up. You're above the 20-day average here. You get under the 20-day average. Once you get under the 20-day average here, all the highs sell and you get lower lows, lower highs, lower lows, lower highs, and until you get a capitulation down to that support, and then the subsequent highs are still selling. So unless oil gets above 82, it's not in a weekly chart trending higher. If you drill down to a daily, it is holding the 2022 trend line. This is where you get a conflict in the timeframes. So the weekly is under the 20-day average. The daily is above the 2022 trend line. So in the daily chart, this is buyable. So if you are a long-term investor, you might want to buy these dips as it pulls back into the trend line, but only hold if it closes above 85 in the foreseeable future. Once it closes above 85, then you could buy as an investor, you could buy pullbacks and trade it up to 100. I'm not saying it's going up to 100, but that's I would certainly buy pullbacks on the assumption that it will move back to 100, because it would then be above the trend line in the daily chart, be above the 20-day average and resistance in the weekly chart. And then you can see these next levels of resistance based on this chart. Now, all of these timeframes are set up in a very particular way. If you look at my hourly, you'll see how the hourly chart is set up. If you look at my 4-hourly, you can see how my 4-hourly chart set up. So all of these charts got very specific chart patterns and very specific levels that I'm looking at. So if you want to find out how that works, then drop me a line and we'll talk about either my day trading course or my mentoring, depending on what you want to get involved with. All right, so any questions? So you can see as oil broke out here, it just crashed into the trend line. All right, so this is why I'm a great day trader, because I do all the homework, do all the hard work. I've got a system that works. I've got a system that's consistent. And that's why our hit ratios are very good. I shorted the FTSE yesterday. I've been shorting the FTSE for quite a while. Well, ever since we hit these resistance, that's not quite a while. So I took a big slice of in actual fact, I'll show you my trade. Where is it? Let me just go and grab. I've got a screenshot of the trade. Yeah, there you are. So 770 profit. That little red line is my entry. This is a screenshot of a live trade. And as it was falling down here at 7,700, I had just under £1,000 on it. So obviously I took that off, and then I've got a core position that from up here, I'm adding every time it bumps into resistance. Okay. For day trading, if you're day trading from an ordinary spread betting or CFD account, no reason why you shouldn't trade from as little as £500 or £1,000. You don't have to have a massive account. Obviously, the smaller your account, the smaller your position size. If you only need a bigger account if you are looking to trade futures. So I mean, you've got to have at least 25,000, 30,000 if you want to trade futures. Otherwise, well, yeah, you can see on this account, I've gone in here at £10. I don't know if you can see that, if it's big enough. I've traded £10 a point on this one. Let me see if I can increase the image size. Yeah, so I've got in £10 a point on this one. I use a bit more leverage on the FTSE than I do on other charts. I shorted that level because it's a level I've been stalking for. I prepped for because it triggered short on my system. Because once I drilled down from the weekly to the daily to the 4 hour, this is a 4 hour chart, it triggered short on my system. That's why I shorted. Well, let's look at it. Let's have a quick look at the FTSE in detail. Come on. Let's call the FTSE up. Where are we? Yeah. So here's the weekly. Look at all this resistance up here. We're struggling with 2018 highs. And we've had 2 weeks of lower closes. That's why I shorted it. Can you see that? So we've come up on lower volume. We've got a major resistance level. So if we break down these levels, then I'm looking for it. Ultimately, I'm looking for this to really, if we come out of that chart pattern, we could drop hard if we come out of that chart pattern. All right. Right. So you guys need to come in my trading room if you want to get these kinds of trades. Exactly. So many traders study 1 minute charts, 5 minute charts, and they're in and out trading trading in and out all the time, firing off loads of trades and lose money. You've got to have a very tight, protect your capital, know exactly what you want from the markets and go and find it. All right, I'm going to leave that there. I'm going to finish off here. I hope you enjoyed that. I will pick another important theme for next week. Yeah, well, actually, the live room is me sitting here with my charts all lined up, talking about what I'm trading. And it's a system. So what I'm doing is I'm showing you my live charts using the system and picking off the entries in the system. The live room opens at 10 minutes before the US market opens. It's normally up and running for about anything from 30 to 60 minutes, depending on how active the, and you see the charts in my room, yes. And once the room closes, then we go to another Telegram alert room. And I post my trades in a specific Telegram alert room to do with the members room. All right, information about the training is here. So have a look at what's involved. If you want to have a chat with me about specifics, then please do. Drop me a line. Otherwise, I'll see you next week. Thanks, guys. Thanks for joining me, and see you again. Bye.